The temperatures are rising, and so are home prices in Reno and Sparks. Let's take a look and see what happened in real estate in Reno and Sparks. Wow, look at that. We hit another record high, $416,500 for median home price in Reno and Sparks. As you can see, we beat our record from last month of $415,000. So we have still seen an increase even with everything going on with COVID-19. Home prices are still going up. Looking at it over a longer term, you can see last April we were at $377,000 and now we're at $416,500. So good news is it wasn't a dramatic jump, and so we'll see what May has to bring, but home prices are still moving. Taking a look at average days to contract by month. So this is essentially how long it takes for a home. We put it on the market. How long does it take to get an offer? And you can see 39 days to get an offer on your home and get that accepted. Compare that to last month of 38. So we've went up 1 day since March. And that means that everything that's going on with COVID-19 is not dramatically affecting real estate. You know, we weren't sure if we were going to see this number jump for April, and we actually barely saw it move. So homes are still selling really fast, less than a month or just over a month for an average for all prices. Now, taking a look at by price range, look at that. Some of the lower price range is the 200 to 300 and 300 to 400,000 price range are both under a month to accept an offer. Wow, so things are still moving. And what's interesting, I wouldn't really pay too much attention to that big number on the far left there of 188. That was just most likely one home that really needed some TLC on it that probably couldn't do any financing, and it just took a long time to sell. And that's why we see a big dramatic number like that. Now what I find fascinating, we still see that $1 million to $1.5 million price range, still higher than pretty much everything else. And so we are still seeing some homes take a little bit longer to sell in that price range, but isn't that crazy? $1.5 million plus is taking only 48 or 46 days to sell. So very interesting, but homes are still selling relatively fast. Active inventory by month, and taking a look at that with the new listings and solds, we can see that our inventory had a decent jump from 765 to 826, so that's great news. We are still low on inventory though, but we saw that inventory go up. As you can see, the solds, we saw a decent drop in, and I'm guessing it's likely because of COVID-19. We're starting to see those effects now of homes that would have sold right when got an offer right when everything started to happen, but maybe they didn't and they're taking a little bit longer to sell, or they just didn't sell. So we're seeing some effects of the COVID-19 now hit the market in terms of solds, but we still have 374 homes sold, and that is a big deal, I think. New listings, we can see 561 new listings still came on the market. That's more than we had in February. A little drop for March, so we were anticipating originally a bigger new listing number, but hey, 561 is an awesome number. Homes are still selling. Homes are coming on the market, and that's great news. Now, look at that, 2.2 months of inventory. We jumped up. You know, it's unfortunate it took something like a global crisis to get us to start moving upward again, but we did get a little bit more month supply of inventory. So we went from 1.5 to 2.2. That's great news. We are still shooting for that 5 to 7 month range to be considered a balanced market. Splitting that up into all these different price ranges again, you can see that those two lines are the 5 to 7 month range that we're shooting for balanced market. Pretty much almost everything is still in a seller's market range, except for the $1 to $1.5 million is in there. And then what's crazy is that, look at that 1.5 million, 17 months supply. So we did see a big jump there, which was interesting, but everything else, look at you got 3.1, month supply for the $600,000 to $750,000 price range, all the way down into the $400,000 price range, 1.9 month supply. So inventory is still tight out there. We do need more homes, and that's because people are still buying homes. New contracts. So this, again, we started doing this slides last month because it's a great way to track more directly a correlation between everything happening with COVID-19. So if you look at April of last year, we had a very strong spring market last year. 654 new contracts. That basically means accepted offers on homes. And so 654 new contracts versus 428. Now, good news is we did go up from March, so that's excellent. We're still holding steady and going up a little bit with an increase, and we didn't drop. So while we likely would have seen those numbers go up higher than they did if there wasn't the COVID-19, they are still very strong. Taking a look at a national scale, you can see 3.4 months of inventory for March. Now, a reminder, this is a 1 month lagging, so that's why it's March numbers, not April's numbers. It takes a little bit longer to get all the national statistics together. So, but we did see that jump up. So this is the first national number we've seen since we've started seeing those stay-at-home orders come out. So, not surprising there. All right, let's get a little bit more hyper-local. We're diving right into Reno's info, and we can see it jumped up. Look at that, almost $440,000 for median price in Reno. Those solds, remember on the Reno Sparks numbers they dropped, and that's, look at Reno's sold. 252 homes sold, so we're still seeing those solds, but it did drop. Inventory dropped just a little bit, down 5.9%, and new listings had a drop as well, down 13%. To 376 new listings, but still 376 homes came on the market in Reno. Taking a look at Sparks, the price dropped there, $386,450 for median home price in Sparks. And what I found fascinating was the days to contract. We had see that number a lot lower last month. I thought it was a little bit abnormally low, so it had bumped up to 33 days to contract. So that's if you compare that back to the Reno numbers, if you rewind, we were in the 40s there. So 33 is still a great number to be at for days to contract, about a month. So the market is still very strong. Look at that. Inventory went up 3.3%. So good news there. All right, let's head east out to Fernley. $273,450 for a median home price. And 38 homes sold out there. It was down 24%. And they did see the new listings drop down to 28 new listings, a drop of over 57%. So pretty big drop there. So we'll see how Fernley does. But yeah, the median home price just dropped slightly. Nothing too dramatic though, which is good. Prices are still holding. All right, let's head south to Carson City. $331,500 for median home price there. That's down 12%. And looking at the units sold out there, 46 homes sold, which was actually an increase over last month. So good news there. We did see the new listings drop though. So we're going to continue to watch that and see how everything goes out there. But everything's still looking, there. I just want to point out, we do see some bigger numbers, the new listings down almost 34%. But I don't think these are dramatic numbers, and a lot of these numbers are going to start to increase as we start to reopen the state and people are going to go out there and start buying homes. Let's look at some more affordable ranges again. The condo townhomes available here in Reno and Sparks. Again, when you look at these, always keep in mind of what that HOA fee is, because that is factored in when you are buying a home and getting a mortgage. But median home price, $230,000. And it was a little bit of a drop from last month. We did see those units sold have a decent drop as well, down to 61 sold. New listings dropped a little bit as well, down to 84. And our days to contract is only at 47 days. So still moving relatively fast. All right, I want to always address this. Now we're going to probably continue to do a little segment in these videos for the next couple of months, just seeing and tracking how this is affecting real estate. So the question is, when is the economy going to recover? Now, I don't have a crystal ball and can't guarantee it, but I can look at some forecasts and some numbers and make some judgments there. Look at some of these financial institutions are making some predictions of where our GDP is going to be for the rest of the year. Now, they are forecasting we already are, the original advance estimate looks like it's going to be a drop of 4.8% for the first quarter, and the second quarter the GDP will probably be down as well. But look at the third and fourth quarter, we're likely going to go back up in GDP, so that's great news. If we do dip into that recession, we're going to come out of it relatively quick, it looks like, so that's great news. Now, I really found this slide probably one of the most fascinating out of this presentation, because look at this. We hear these very awful reports of people losing their jobs during this time. And you can see right here, 14.7% of the employment workforce lost their jobs, which is awful. And hopefully they're going to be getting back to work soon. As you can see, this the right side pie graph, you can see 90% of those layoffs were temporary, and hopefully they'll be getting back to work relatively soon. As of yesterday, the governor of Nevada announced that we are going to start to reopen the state. Some restaurants at 50% occupancy, salons, which I'm excited about, are reopening. So we are going to start seeing some things reopen. So hopefully we'll see that number tick back relatively quickly. And that would be great news for everyone. But I just want to reiterate, a lot of these job losses are temporary, and we're going to see them come back to the workforce hopefully relatively quick. Bottom right one was kind of fascinating too, just showing the unemployment rates with the type of whether they're adult men, adult women, or teenagers. And we can see that the teenagers was 32, almost 32%. So bigger chunk of the unemployment was from teenagers. All right, so this is numbers coming from Showing Time. Showing Time is what we use to schedule, real estate agents schedule showings of homes. And we can see we were climbing upward as we approached the spring market, and then everything kind of halted with everything shutting down, and we saw a dramatic drop in showings. But look, over the last 4 weeks, we have been climbing upward week after week. So that is great news that we're starting to see showings come back up. And actually, a lot of this is agents are starting to get a little bit more crafty on how we are doing business. So for those buyers that might not be ready to go into every single home and look at it quite yet, we have different methods to show you those homes. For example, in my app, my mobile home search app, my clients can request a video tour right from the app and request a time for me to go to the home for them and show them around, and they'll be able to watch live on video for them. And then that way we can come back and they can watch it. And if they narrow the homes down to maybe 1 or 2 homes they might like out of those video tours, then they'll go in person and take a look. So we're seeing more of that right now. If you want a link to my mobile app where you can do that, I'm putting it in the description box below so you can check it out. Now, I wanted to throw these numbers in here because they just came out after our last video, so I wanted to make sure we put updated numbers in homeowner equity. You know, some people might struggle for a little bit with everything that's going on. Maybe they were furloughed and are nervous about making house payments. Well, look at this home equity out there. Over 42% of homeowners own their home free and clear. 16.6% own but over 60% of or have over 60% equity in their home. That's huge. That's over half of the homeowners out there own at least 60%. So I think that's phenomenal numbers. And even, you know, even the 41 to 60% or the 21 to 40% equity, that is huge with potential. If they need to sell their home, they're going to have some equity and have a little cash on hand if they need it. Talking about recovery, I wanted to really show this graph because it's a great way to show how we're predicted to recover. Now, the yellow and that white line are the Great Depression is the longer gray one, and the Great Recession, which we're most familiar with, that just ended feels like not too long ago, but back in 2006 when it started, you can see it took a while to come back. It took us some time. Now, forecasters, the Goldman Sachs and JP Morgan are both predicting what's called a V curve, and we're going to, while we had a steep drop, we're going to start recovering faster than the Great Depression and Great Recession, which is great news. So it might be a little bit of time before we get back to where we were, but we're going to recover quicker than before. So that's great news for everyone, I think. As I finish up, I always like to go over interest rates. Wow, these numbers are just crazy. They're staying so low, and they're forecasted to stay low, which is great news for those buyers out there because it gives them a little bit more buying power. And those people that might be looking to get into a home, maybe they haven't bought a home before and they want to get into it, it's a great opportunity right now. So I'm really excited to see these numbers so low. And I've even seen some quotes go out there for under 3% for a loan on a home. That's phenomenal. That's crazy to think of, getting interest rate less than 3%. Now, I can't guarantee that because there are a lot of factors in play to do that, but we're going to do our best to get you that quote. So if you have any questions about getting qualified for a great interest rate, feel free to send me a message or contact me. Or if you have any questions at all about these slides or the real estate market, my information's right here, and I'd love to talk with you about it. So I thank you guys so much for watching, and stay safe out there, stay healthy, and if you need anything at all, don't hesitate to reach out. If you want to watch any of my other videos, you can click on them over here, and don't forget to subscribe. Thanks.